Hello everyone. So our today's topic of discussion is liquid assets. Now we have already discussed what is liquidity, what are current assets, what are current liabilities. Now it is imperative that we also discuss what is liquid asset. Now liquid asset, as the name suggests, is basically the assets that can be quickly converted into cash within the shortest period of time possible. Now you might find that this definition is very much equivalent to current assets. That's because all liquid assets that fulfill that time constraint condition, obviously that's why they are called liquid assets, they come under the category of current assets in the accounting, in the account books basically, right? Now liquid assets usually have a liquid market where it is easy and convenient for the assets to be converted and transferred to other party. Also, the demand and security is really high. So to fulfill the liquid assets, there is always a liquid market which is equally active in such transactions. Now, what are the examples of liquid assets? So your cash is the biggest liquid asset, and that will be like a holy true, that will always be true. After that, you have cash equivalents. Now cash equivalents come second to cash because they can also be readily converted into cash, most preferably within 3 months of period of time. And these usually include very short term investments, treasury bills, treasury notes, you have market funds. So all these that can be quickly converted into cash will come under cash equivalents, right? Now next is money market accounts. You have marketable securities. Now marketable securities are again your stocks, bonds, index funds again, but it's not that all marketable securities can be considered as liquid asset, because the time factor is really important. The ones that can be converted into cash within a shortest period of time, only those will be covered under liquid asset. Then you have short-term bonds, you have account receivables, and you have inventory. Now why I'm keeping account receivables and inventory at the bottom is because it is not possible that 100% of account receivables you will get within 1 year of time or a very short period of time, right? So if someone has some money due and you will have to collect it, it is not necessary that you will be able to collect it in the shortest period of time, within 1 year or whatever time you have taken for your assets to be considered liquid. So it is not important that you will be able to collect that. So whatever part you will be able to collect or anticipate that you can collect within that period of time, the short period of time, and convert it into cash, consider only that as account receivable. Similarly with inventory. Now for some companies, inventory can be considered under liquid asset and others not. So companies like Walmart, if I talk about India, Metro, cash and carry, right, best price. So these companies know that their inventory goes very fast, their inventory turnover is very fast. So whatever inventory they anticipate to be sold within the short period of time and convert into cash, they will consider it under liquid assets. But on the other hand, there can be companies that sell big machineries, which are like selling maybe around 100 units a year, right? And that also is not necessary selling, right? They're not sure about the whether that amount gets sold or not, right? Then obviously those heavy machineries, and then their payments are again a lack, right? When will they get their payments? When will the account receivables for that get fulfilled? So those might not come under liquid assets, right? They can be assets. That inventory is an asset, but it cannot become a liquid asset as such, right? So the liquidity of these commodities vary with the profession, with the company, with the type of product you are selling, right? So you have to understand that all these commodities have a segment that is more liquid and some which is less liquid. So that is where the companies see according to their timeline, and then they decide which part of it is liquid for them, which is not that liquid, that which part of it isn't that liquid for them, right? Now what are the factors that affect the liquid asset to be considered liquid? As I've already told you, the first thing is they should have a liquid market with very high demand, and the ease of transaction and the security should be very good. Only then those assets can be considered liquid. So for example, in terms of cash, it is very easy to buy a commodity or get rid of your short-term obligations by simply giving them the cash, right? It's an easy and one way, a very secure transaction, because cash is the ultimate legal tender which is issued by the government, right? It is the valid account of that money, and everything is basically accounted according to that. That is the ultimate goal. So if you're straight away giving cash to somebody, that is the most easiest and the most secure way of getting rid of your obligations. So that's one point. Other thing is the time taken in the conversion to cash, right? So other than cash, if your cash equivalents, your commodities, your inventory, your marketable securities, how much time they are taking. If they are taking too much time, then they won't be liquid. If they are taking less time, preferably it's usually less than 3 months in terms of all these commodities, then obviously they will be considered current liquid asset, because you need that cash fast, right? Now on the same grounds, I have already mentioned about the markets as such. So what comes under liquid market? Now the biggest example of liquid market is the stock market and the foreign exchange market. These two are very much considered as liquid market because there's always a high demand in stock market. The transactions are electronically done, and those transactions can easily be converted into cash instantaneously, right? Similarly, foreign exchange market is again one of the biggest liquid market. Trillions of dollars of cash is getting converted and transferred within countries. And yeah, so these two are biggest examples. Now illiquid market, now the biggest example of illiquid market is the real estate market. Why? First of all, real estate market is a time consuming market. You don't know how much time you will be in there for selling your particular commodity. Will that commodity yield the desired returns? That's also a problem. And is there a cost associated with getting rid of that property? So this is another important factor. You might be gaining more, but what if the cost of gaining that profit negates, right, as you sell the property, because you are in there for a longer time, you might not get that much return. There are procedures and fees involved, the fees involved in transactions, right, in selling your commodity, transferring fee, XYZ fees. So all these things are important. So time, cost, gains, these are important factors to decide whether a market is liquid or illiquid. Security, ease of transaction, right, ease of transfer of ownership, all these are important factors, right? I hope I was able to make you understand. I'll put the links for what is liquidity, what is current asset, what is current liability also in the description as well as in the I button. Do check them out, because those are also important. They explain everything in detail. They also explain what are the financial ratios that take into consideration the liquid asset, current asset, current liabilities, and how do they calculate the liquidity of a company and their ability to get rid of their short-term obligations, and their investment, what are their investment opportunities and all those things, right? Do like, subscribe and share, and please take care of yourself. Thank you.